Hello everyone. Thank you so much for joining in. Welcome to India Factoring Chat Show. Factoring, one-stop solution for your global aspirations. I'm Vinod Vasan, your host for the day. Today we have two eminent speakers to join with us for the show. Before that, let me take you through India Factoring first. India Factoring offers working capital solutions through the factoring product aimed at converting your receivables into cash. The company is a subsidiary of a European bank, Finbank PLC Malta, and is registered with the RBI as an NBFC factor. India Factoring is also 83 category authorized dealer. Through our global network, we offer one-stop solutions around receivable finance. Today, our eminent speakers will talk to us about factoring, regulatory framework, market trend, etc., and solve all your queries pertaining to trade and financial aspects of your business. Stay tuned. Let us welcome our first guest, Thompson, Regional Manager, South and Southeast Asia, FCI. He has over 20 years of global factoring and trade finance experience in the Asia-Pacific region, having worked in the industry for two US factoring giants, GMAC and later Wells Fargo Bank, where he served as Senior Vice President responsible for business development in Asia. Thompson spent the past 7 years overseeing a team of trade finance factoring experts working in South and Southeast Asia. Welcome to the show, Thompson.
Thank you for inviting me. Thank you. Thank you. Hello, India.
Yeah, hi. Let us welcome our second speaker, Ravi Valacha, CEO, India Factoring and Finance Solutions Private Limited. He is an experienced banking and financial services professional with experience in factoring and supply chain finance, and current CEO of India Factoring. Welcome to the talk show, Ravi.
Glad to be there again. Hi, Thompson.
Hi, Ravi. How are you doing? Nice to see you again.
Nice to see you.
Yeah. So let me start with Thompson regarding FCA. So FCA was set up in 1968 as a global representative body to promote factoring business and to connect factors to global trade business. So today it has grown up more than 400 members in 90 countries. So please take us through FCA's overall role in global trade finance and its future plan.
Thank you, Vinod. Thank you. FCI, formerly known as Factors Change International, throughout this over 50 years of growth, from just under a dozen members, that forming this sort of like a fraternity for factors and banks. Now we've grown so rapidly over the years, over the decades, to over 400 members and in over 90 countries. We've seen a lot of growth in this region, and globally, our role, FCI, I think we have a couple of hats. We educate, we share knowledge, especially in factoring industry, supply chain, finance industry, trade finance. The second head is we build connections. We help to build connections and connect our members and even non-members. We create and hopefully create business opportunities for them. Another role we actively pursued, and I think we play a very important in this development of, say, emerging countries. We work with a lot of regulatory bodies, local nonprofit organizations, even global and regional ones like ADB, Asia Development Banks, ICC, IFC. We set standards like general rules of international factoring. GRIF, what we call, is the legal backbone in our industry for all the members and even non-members to follow and adapt. Not to mention that includes the rules of arbitration. Whenever a disagreement arises, they all follow that rules of arbitration and follow that GRIF. So this is, to summarize what we do at FCI. And for our future plans, I think we will continue to have that kind of roles in the region and even from a global perspective. Continue to work with organizations like ICC, IFC, BIBM locally, and also something that we witness and see from the industry, hear from the industry, is about the evolution. And then we can talk about that later on, but it's all about digital.
Sure. Thanks, Thompson. So it's good that FCA's knowledge sharing is very important in a global counterparty factoring in two-factor model. And we have seen it's a robust system in a factoring world, like GRIF rules and the EDI platform are the ones to help the import factors and export factors to do the transaction seamlessly, day in and day out. So let us move on to Ravi. India Factoring is one of the long-term member in FCA, maintaining also the number one position for the two-factor model doing business from India. And how is India Factoring experience with FCA, and how do you see India Factoring volume of transaction for the current year, Ravi?
Thanks, Vinod, for that question. In fact, very pertinent question. India Factoring has achieved what the number one position in export factoring. It's only because of FCI, and I would, I'm actually, you can say, a leading evangelist for FCI memberships and FCI support towards contribution of export factoring growth for India Factoring. The reasons I would just elucidate a few points is that it brings in a lot of credibility. They are the knowledge house since 1968 across factoring and supply chain finance. So a huge, history and a legacy. As Thompson mentioned, that the GRIF itself is a proprietary, vast volume legal backing supported and used and test cases were spread across decades of experience, which has been primarily in the US and the European countries, and it is a tried and tested model. In India, unfortunately, it was never popular in the early days. However, since we have started in a big manner, we have achieved our success only on the back of FCI's two-factor model, and it brings in its own credibility because it's not just about 400 members across 400 members across various countries, which is what the specialty of FCI is. It brings the not just the credit protection element, but also other specialities, regional specifications like the collections and the advisory support provided by the import factor. Likewise, the support on the ground, because the legal practices, maybe whatever is defined, but the legal practices are very nuanced driven. For example, I'll quote, in Brazil, for example, for an assignment, it has to be within the local language. It has to be accepted in the local language, and there are certain nuances which require. Sitting out of India, possibly we may not be in the best position to understand these fine nuances, which a partner based out of Brazil or Mexico or whichever country that is, they bring in. And that's all possible through the network of FCI. We have used the FCI network right from the inceptions, and I'm glad to share that the growth which we have achieved is completely on the back of FCI, and I'm a huge proponent and supporter of FCI's two-factor mechanism.
Yes, congrats, Ravi. I haven't been able to really say so, but congratulations again, not only winning the deal of the year from FCI and from all the members, but also continuously being the leader in that market. Leveraging our platform, edufactoring.com, to perform beautifully and being the leader in terms of volume, in terms of performance, association with all the members here in the region and globally. Congratulations again.
Thanks.
Great job to you, to your team members, and everybody in Indian Factoring.
Yeah, that's really great. So 5 consecutive years is a really great achievement. Congrats to Ravi and Team India Factoring. Hopefully, current year India Factoring maintain the same volume in the position. So let us move on to the more region-specific question. To Thompson, Southeast Asia is one of the important region for a global trade to connect West and East. So lots of trade happening from India to Southeast Asia countries. So how well FCI two-factor model import factor services are in this region? And do you expect to increase in number of active import factors in Southeast Asia region?
Rather than just Southeast Asian region, I would include South and Southeast Asia. Okay, South Asia
Yeah.
as well is a really important or the most important emerging markets. I can tell that um, from a global trade point of view. Um, to answer your questions, I would see and I would expect a lot more import factoring capabilities popping up in the next 5 years, no doubt. There are a couple of reasons for that. Not only India, but also India being the most important or emerging markets right now, not only in the region, but from a global perspective. As I mentioned, there are a couple of reasons. We are seeing and witnessing a lot of new factories, a lot of manufacturing pouring in. Okay, you can just tell by the FDI alone last year. So for India, a lot of new opportunities from those new lending manufacturers. And what do? They bring their supply chain ecosystem with them. Okay, so that not only help push the export factoring markets and development, but also it also create a need for to balance that from an import factoring perspective. So you can only import raw materials and you can add value and then export out, right? So I think we need to really play a supporting role to really help to facilitate the establishing of import factoring capabilities, not only in India, but also the ASEAN region as well. But we're definitely seeing more of those popping up. We have a lot of new members asking for that opportunity already. So no doubt about it. Yes, there will be more import factoring services popping up in the next few years.
Okay, thank you. So good to know that FCA is working for more import factors. So definitely it will be a big support for exporters to get more finance arrangement from India. And Ravi, this is for you. And India export goods over 45 billion to Asian countries. And to specific to South and Southeast Asia, the major portion of exports goes. How well India factoring connected with its counterparty factors in those regions, and what is India factoring role in factoring business to Southeast Asia region?
Yeah, so like Thompson mentioned, there are a number of factoring operators. Primarily, these are largest of the banks in the region who are members of FCI, and they provide good enough coverage across the region. So that's support which is there already, but there is definitely room for more, and which we are seeing. The appetite in the specifically independent factors is growing, and there is more scope for growing. Like for example, Thompson mentioned, and we discussed some time back also, is that just before arriving in India, FCI team was in Bangladesh, and Bangladesh has recently put laid down the term the Factoring Act itself. So there is a development which is happening across the region, and definitely there is more which will happen over the next few years, which will help us enable grow the business and cover what is best possible across the region, across Asia Pacific region, through FCI mechanism. However, as India factoring, while we have FCI support also, which is growing day by day, we also do our independent business on the Asia, which we can cover through credit insurance. So the idea is to provide services to the end customer, and FCI is doing its bit to grow the momentum in the developing markets like Bangladesh and possibly other economies which end up having that sort of a $45 billion worth of trade. China, there are possibly maybe 200 odd factoring companies, and number of them are members. The big ones are there. In Singapore, likewise, there are a significant number of members. Hong Kong, there are many members. Many of them do today independent, you can say domestic factoring. The hubs like Hong Kong and Singapore are primarily, you can say, trading economies, and they do a lot of activities around that, using factoring as a mechanism, both domestic and cross-border. we have not been able to frankly scale up the model on the Asia business as yet. However, we have seen the green shoots recently, and with these developments, especially the act being promulgated in Bangladesh, we can expect, because there is a huge amount of business between India and Bangladesh also, which normally gets covered through the LC's mechanism, but there is a growing requirement on factoring, which is the open account back transactions, and we should expect in near future this momentum to grow even further under FCI2 factoring mechanism.
Yeah, thanks, Ravi. So it's good that the still that legal framework is very important in factoring to factoring model. So wherever the framework gets more mature, the factoring is growing. That we have been seeing over the years.
Yes.
And that, yeah. So yeah,
Yeah,
you want to add?
to echo Ravi's comments, actually, he mentioned Bangladesh. And before I arrived Mumbai, I was in Dhaka with my team, and we had a very, very successful seminar event together with ICC and BIBM locally. You know, the impression that I got from, the participants, attendees, together with officials and regulators, the questions that we received and the feedback, they are on another level already. So the awareness of the products, where we're heading, they ask very intelligent questions, and some of the answers that when I asked them, they realize the need for the perfection of the regulatory guidelines and the requirements. They are marching towards that, with welcome arms, with opening arms. That they need to have a more transparent and directive guidelines towards factoring developments from Bangladesh, and from to facilitate open account terms trade with all the other nations, especially India. So I think it's good news for the whole region, not only for Bangladesh and India.
Right. Yeah. True. Thanks. Yeah. So next, more into the industry specific question to Thompson. How do you see India's digital revolution in factoring business, and how FCA International Factoring works with platform and market solutions? Generally, we are aware more into the two-factor, the banks and factoring companies, how FCA operate, and how is your role in platforms and market solutions?
Okay, so what we've seen so far, as you may notice that we, I've signed on a significant number of new product partners, under this membership type of deal to FCI, and most of them, they are what we call platform providers, okay, facilitating receivables funding, and we also have a lot of invoice discounters, okay, so there's a borderline between invoice discounting and full factoring, but my point is we are seeing this new providers that actually they are supporting the funding as MSMEs, okay, where what we call the non-bank or underbanked, where there's a gap between the supply and demand from traditional FIs like banks, okay, so they're really helping, but FCI is also, moving forward and embracing this new kind of technology or platform providers. We are actively exploring ways to cooperate with these new providers, and also, evolving with this new kind of technologies where everything is digitalized, online, tokenization, always tokenization of invoices, and our ultimate objectives is to have our envision that there's a hub and spoke model, and ultimately a marketplace, so that to help importer exporters in terms of providing transparent platforms, all these professional services, especially risk mitigation and funding to facilitate international and cross-border trade. So we are seeing a lot of them, but right now, I think our main role that I can offer them to help them is that the best possible development path is to follow GRIF, within the boundaries of GRIF. That is like a globally recognized and adapt standards. You know, once many, actually many members ask, why is Indian factoring so successful? What is the secret recipe? And I recall Ravi mentioning that there's no secret recipe. Just you know, use GRIF, follow GRIF, and then do your job, do your due diligence, perform well, and then it's success. That's the formula. And I totally agree with him. I saw his operation, all these, young and talented, the staff working, with energy, with passion. And, they kind of depth they would go into to really perform and support the customers. Then I realized what he told me was true. That's the formula.
Yeah, that's true. So GRIF is one of the great framework that Indian factoring companies follow completely in and in out, and that is one of the success reason factoring is growing in India in a greater way. And also FCI, it's good to know now. All the digital related upgrades, they're also supporting those kind of platform companies, and we have seen recently in the current year few platforms also become a member in FCA as a new members from India. And I think FC is participating this month end for Gift City Summit on trade digital things as well, along with the IFSCA. So these are the great opportunity for the new companies which are coming out in a new platforms and market solution. They can participate in the FCA and make use of the legacy of the framework in factoring.
Yes. Thank you for mentioning that, because I almost forgot. I got so busy. Like all the other local jurisdictions that we worked with before from FCI perspective, we not only advise, but from our experience, over 50 years of experience, helping emerging markets to grow, especially in the path of regulatory perfection. There's a process. Okay, there's a path that experience would help a lot. All requirements or mandates from a regulatory point of view, how we can get in line and help them to merge with international standards, globally adapted standards. I think that's vital to really help local bodies, regulatory bodies, to realize that. And I think that's one of the objectives that we have, for that Gift City event. Not only is an enabler for all the stakeholders to really broadcast and inform and share with the industry stakeholders that where we're heading, our action items, our plans, but we are also leveraging this opportunity through this event to tell them how we're going to achieve that, our plans, how we're going to achieve that, and the action items. And I think I really want to invite all the stakeholders in this industry to really pay attention and even joining that event.
Good. Yeah. Thank you. And there is a question from audience regarding FCA import factor model. So no, there is another audience. So from Ramanathan, dear panelist, do you think that success crises such as COVID and the Russian invasion have led to a protectionist trend hampering trade among nations over the last 2 years? How do you see global trade volumes over the next few years? Yeah, this is, I'll put it to Ravi. Would you like to take it?
Yeah, definitely it has. We saw in the pandemic that world is so entrenched, so connected, so interconnected, with so much of interdependencies across the world. That was truly demonstrated during the pandemic. So yes, these global events have an impact, and we have seen two back-to-back black swan events like the pandemic followed by the geopolitical situation which is going on across Europe now. They do have an impact, and definitely the volumes across the world have come down. Just as we were, recovering from the pandemic, the numbers were rising. We have this situation now, which has again impacted, and the global situation which has got impacted is the inflationary trends, the demand reducing to a larger extent, and so that's. However, these are cycles. Check through the history that any year, if there was no occurrence, no such event. So today's scenario, we are living in a situation where what we call it as a VUCA environment, which is volatile, uncertain, complex, and ambiguous. So this is going to be the new normal, I would say. And world is never going to be a stable or where everything is going to be simple, because we are going through such a paradigm changes in our times. The technology is bringing in so much of change. We are seeing these chat GPTs and whatnot of the world. They're going to bring in paradigm changes across the ways of functioning, and obviously that is going to impact the global trade also. We are seeing new trade corridors being formed. We are seeing the new trade pacts being done across the world, and the dependency shifting from one location to the other. So that is going to be a new normal. However, such dips can be seen as a you can say a one-off blips or so, where the world emerges back from these dips and in a strong manner. And I'm sure that that's going to happen over next few months, years time, that the world is going to grow and come out of these situations whenever these situations emerge. And I'm sure that this time also, once the situation normalizes, you are going to see, because that's the nature of human beings, to evolve, right? And I call it as an evolutionary process, and a cycle which is going to be there.
Yeah, thanks, Ravi. Thompson, would you like to add? Because FCA, it's a 60% of world's international correspondent factoring volume goes through FCA model, two-factor model. So how do you see, last after pandemic, the volume of trade happening through the model, and current year, what is your projection?
Thank you. There are a few points I totally agree with Ravi. It's a cycle. I also see that as a wake-up call. This sudden breakdown in supply chain. Okay, so in industry we always mention about, we talk about concentration risk, right? So I think before COVID, actually we had that already. Is highly concentrated. So when you concentrate and focus all your activities on all your supplying manufacturing capabilities in one location, you have that concentration risk. And the wake up call just tell everybody is like, it's time to diversify. So I guess that's why we're having this, what we call, especially from Taiwanese, the southbound move. So the actual benefits, I think, Vietnam, a lot of Asian countries, and India, a lot of South Asian countries are benefiting from this wake-up call. And I think, and I also agree that it's human nature, it's just economic cycle. Once you get to the bottom, things will bounce back. I think the last time we had this deep was 2008, 2009, and everybody went really pessimistic, and all of a sudden it's just bounced back. Demand comes back, and I think once we came out from this pandemic, challenge completely, things will get back to normal. And after that, the cycle of the inflation and the rate heights, things will get back, will be normalized. Okay, and better than before, I would say, because we really sort of like wake up from this concentration risk issue, that we diversify, and then things will become smooth.
True. Yeah, that's a good point. So crisis sometimes give us a good lesson to improve ourselves, to make a more foolproof arrangement. So especially we have seen it in the last after pandemic. Now the companies are more risk aware, and the factoring volume also growing, and the buyers are doing diversification, and the sellers are doing more risk covered trade. So that's a good balance. And there is a question from Jagannathan. So currently USA is a very big market for factoring. However, we have only 2 factors under FCA. And what are the steps taken by FCA to increase the numbers?
Okay. Yeah. So yeah, it was mentioned there are only two factors, but the last time I checked, I think the U.S. market, since is a big market, we have more than two. In fact, and it's very diversified too. We have non-bank, we have bank factors, and we have some sponsors, we have some tech firms. So it's quite diversified. That market is huge, no doubt about it. And uh, but we continuously FCI facilitates the growth of membership so that more would adapt our standards, and facilitate international trade. That's our overall direction. And no matter how many members or how or it's just an emerging market for us, a new market for us, we will fully support the development in terms of membership, in terms of facilitating open account terms trade sale, and cross-border trade. No doubt about it.
Okay, thank you. Coming back to the digital related question to Ravi, digital revolution in India has recently changed factoring business and created a great level of awareness and acceptance in the market. And how do you see these changes? And what are the recent upgrades India Factoring has done to align with the new developments?
No, so obviously I mentioned that yeah, the digital is the new way forward, and towards that, I think lot many initiatives are underway. I think Spreads model is a success in India to the extent what may not be to the extent of the growth which India is seeing. However, in past couple of years, we have seen a reasonable amount of growth with doubling of the volume every year. And once a new initiative such as this takes a self-propelling mechanism, then it starts picking up pace, and that's what we are seeing now. And from last year to this year, you'll see a huge momentum, and obviously the years following that, there will be a huge momentum. Obviously, this is supported well by the local players, that includes regulators, the government bodies, as well as industry, both from supplier side and the buyer side, of course. But this is not enough at this point of time. There is definitely more, but the initiative has begun, I would say. Yes, there are certain sectors which can improve. There are certain industries which can provide more support. The certain large corporates which can provide more enablers to their supply chain by accepting the factoring mechanism. That's always more which is required. However, the momentum is begin. Towards that only, this new initiative of the IFCA, that is IFCA, has taken shape, right? The first, it was the domestic trade which picked up from trades, and now we are seeing the similar initiatives at the IFCA as well. So again, it's a very new initiative. It's a paradigm change which we are expecting to bring in the as a marketplace-driven economy. But the traditional factoring also has a huge space to grow alongside this, because the market is so big in India, the opportunity is so big that there is so much for each one to achieve, and that's why you're seeing more and more players, more and more financial institutions, bankers wanting to get into this space, which is factoring, and we welcome them each and all, because the market is so big that we only as a leaders can't do more than what we can do in a limited manner, what we can do. So definitely there is more space, and that's why we are seeing that more entrants. There are more memberships of FCI even in India, which is going to change the digital ways and mechanisms of functioning. As far as India factoring is concerned, likewise, we are putting up an initiatives. We are live on Threads. We are live. We did our first transactions of IFCA in the sandbox environment. So there also we are live. And on a standalone basis, also we are implementing the new digital mechanisms currently, which should be live soon, which will bring in the new generation software, providing the end-to-end digital capabilities. And that's where our initiative is, which will provide ease and convenience to the customers while following all the regulatory and compliance requirements also. So all aspects, we are taking those initiatives to support and grow this business.
Yeah, thanks, Ravi, for the feedback. And let's Good to know that India Factoring, they are into the traditional business and also into the new age of digital side. So it's a good balance. And we have a question from a viewer, Shankar Muthuswamy. My question to both the expert speakers: what would be role of trade credit insurance in case of factoring solutions? Do you see any growth for general insurance companies engaged in providing credit insurance? Please shed some lights on the same. Yeah. Anybody, Ravi, would you like to take?
How about I give it some insight? I've been working. Yes, I've been working with trade credit insurance for I don't know how long, decades. I see them sometimes as they are a risk mitigation provider. Okay, no doubt about it. So just as like on the two factors model, it's just whether it's apple or oranges. It depends on the needs. But as Ravi mentioned, that the pie is so big that it can house everybody. Sometimes I would see TCI, trade credit insurance, as a complement to the service, to the industry. They offer different types of coverages. It's more general, it's more macro, but two factor system is more specific, and sometimes the protection is higher. The payout time under PUA, what we said is swifter. Okay, so it really depends on the needs for the user. So not only to the exporters but also to FIs. Sometimes it's more specific and industry focused or even country focused, then they would leverage two-factor system. But when they are looking for a more general approach, according to the macro side of things, probably they would opt for TCI. So sometimes it would be like you can have best of both worlds. You can use both to really complement each other.
Absolutely, I completely echo that point of Thompson. So we cannot say that what is better and what is not. It depends on what is the requirement of the end customers. Like definitely TCI is a huge enabler, like FCI is a huge enabler in markets where FCI is not present or where coverage may not be possible. The TCI is an extremely important. And globally, if you see the factoring volumes, even with FCI mechanism, it has grown on the back of support of TCI as well. So most of the banks who are members of FCI also, or factoring companies, they end up using balanced approach and use TCI also as a risk mitigation tool on the back end. So it's a huge enabler, and definitely even in India, it has just about begun from last year onwards, and definitely there is more especially for MSMEs who are always choked for finance because of lack of collateral, which most of the banks end up asking for. So it is a huge risk mitigation tool. However, even though it is a risk mitigation tool, completely relying on the TCI and doing away with the credit aspects is not something which is recommended. TCI is a secondary mechanism or a risk mitigation, not a primary risk mitigation. The primary risk mitigation is always your due diligence. You have seen the emergence of many fintech players who completely ride on the back of TCI and do away most aspects of the credit due diligence, which is not recommended at all. We have seen a situation earlier where TCA can be incorrectly used, and that has been globally seen. There have been number of issues which has happened where people have or the banks have not used it correctly, or even the fintechs have not used it correctly. We have seen even in during the pandemic 2021, the largest of the supply chain service providers falling because they didn't adhere to the core principles of credit and completely riding on the back of insurance only. So that's not a recommended practice. You need to have a balance. You need to have a balanced approach. Use FCI, use TCI as a risk mitigation, but use it as a balanced approach, not a primary comfort, without doing your due diligence.
Yeah. Okay. Yeah, that's a good point. So even we have a TCI, the lender should have a complete responsibility to have a own credit assessment to take care of the risk of the exposure, and also the necessary follow-ups with the buyer. So that balance will maintain in a healthy factoring business. Yeah, now more specific, we have discussed on digital and yeah, the TCA related factoring arrangement. And let me more specific to the fintech related thing to Thompson. So we have been seeing a lot of fintech companies venturing into factoring recently, and many does business without FCA association. And what are the benefits to deal with the lender associated with the FCA, and how are the fintechs operating outside FCA arrangement? I mean, without FCA arrangement, how they are operating? Can you give us some light on that?
Thank you. Yes, we are seeing a lot of fintechs popping up for the past few years, and I think it's a good thing for in a certain way that they're helping, in funding the receivables, discounting the invoices, and I'm sure there will be many that work outside the FCI parameters or outside GRIF. As I mentioned before, what is a secret recipe that to a successful, risk mitigation company or provider, as Ravi mentioned, and a lot of them have mentioned that, we have GRIF that's proven for over 50 years that if you work within the backbone of this GRIF, actually, it's much safer. Okay. So that is, a lot of global FIs and even fintechs are adapting, because they see that it's a good thing. You got to have, when you work with cross-border trade, you got to have, sort of like a standardized rules to follow. So that's where GRIF is. That's the value. And if you mention that a lot of invoice discounters or that are not working within these boundaries or within this FCI-enabled legal framework, is it a good thing? Probably not. But what we're doing right now with the fintechs is that we are actively or proactively working with them. They're working with us to work towards that objective, to have standardized guidelines and regulations. And I think that's a good thing because they realize that working with FCI under unified global standards actually is to their advantages. They will be more recognized to have more partnerships globally. Okay, so for domestic discounters or funders, they may not be required and they don't see the advantages. But anything to do with cross-border trade, and I think they realize that this fintechs is to their advantage to work with FCI and follow GRIF.
Right. Yeah. Thank you, Ravi. Would you like to add in this spot how the difference between in Indian market various fintech companies and the more FCA operated companies and without FCA? What do you see a big difference and why it is important to deal with them?
No, so again, a balanced approach. I wouldn't say that one is better, the other is not, but definitely the pedigree and the benefits of FCI far outweigh. I would strongly say so. The reason is very apparent because there is a coverage, there is a legacy which is there of more than 50 years, and a test case, huge test case over a number of years, which has a proven case. So that cannot be done away with, or completely looked, not given a point to. So definitely there is a huge support mechanism from FCI which can be used as a test, as a bedrock for relying on the FCI mechanism of two-factor. The fintechs equally are important in today's scenario. The reason being because it's a digitally enabled world, and fintechs bring those path-breaking reforms towards that. So technology is an important initiative which is being brought in. How do you converge best of both is something which is required, not by cutting corners, but by creating more enablers. Technology as an enabler, not only from an ease or convenience for the customers, but safeguarding the interests of the institution is equally important. and that's where the technology enablers are equally important. So that's where we need to see the convergence, the best of convergence, and that's what we are seeing actually. There is a convergence which is likely to happen. FCI was one of the leaders when they brought in the four corner model. Of course, it has not seen the growth which could have been, and which could have been much better, but that was on the back of pandemic, which ended up affecting. It was launched only in 2019, and then we followed the pandemic, so it never picked up. So there is already an initiative from FCI to converge on the tech-enabled services, and I do see as more and more fintechs, especially you are seeing most of the members, the fintech operators or the new age platforms which are gaining membership of FCI, and I see that can be leveraged to the great extent, bringing in the legacy approach of what is the best which FCI provides, that is the GRIF and the underlying legal definition in the volumes, which is a very comprehensive approach, and using the technology enablers like fintechs and converging both of these to leverage and grow the market. I think both can come together and do some wonderful stuff.
Yeah.
Can I add something? Can I add something I forgot?
Yeah, please.
Yes, actually, if any audiences or they're interested in to follow this, especially legal framework and regulatory compliance, arena, we will have a special panel on day 2 of the Gift City event. That would be attended by officials, from IFSCA, regional bankers, stakeholders, exporters, fintechs, to discuss that. Representatives from IFC, focus on these topics that are vital to the industry. So if any audiences they like to follow that, they like to get some insights from that perspective, stay tuned or pay attention to that Gift City event, 28, day 2, panel 3.
Yeah, it's a great event. All are looking forward. I think it's going to be a great success in India for the digital revolution. And good that FCA and all the regulatory bodies are participating and to promoting the thing. So, this is another question we have. This is again more specific to the region. So especially Africa. And there is another question from Paramanand. I think we have answered that. I think more specific to USA, many of them of our viewers are looking for more input factors. I think Thompson, you can add anything, something more that.
Yeah, thank you for the questions. Well, after working for US, factors or banks for over 2 decades, I think I can add some insight to that. But actually, we don't see a lot of factors, or a lot of factors exiting the market, but instead, as the industry always says, there's a cycle. Okay, Ravi put it very well together already. Every time we're experiencing cycles. So do you see a lot of factors leaving and exiting? In 2008, 2009 crisis? No, actually, they pull back. They're still there. Most of them are still there. Here today. But in terms of cycles, they sometimes pull back, because if you can tell the stats from US, they are not, especially from the retail section, they're not performing especially well, especially after 3 years of COVID. A lot of name brands that has a lot of stores or outlets or retail stores, they are not performing. They had a very challenging past 3 years, right? So actually, these factors they see that from the figures, from the overall what's the economic climate. It's natural for factors to pull back when they see some credits deteriorating quickly. And you can tell by the spending and the rates are hiking, inflation especially. It's just imagine the inflation that has on, the effect and the burden on, normal household. Originally you have $100 to spend for shopping, during Christmas. But, once you figure factor in the inflation, now you do not have, consumable income extra of $100 for Christmas shopping. You only have like $50. So that creates, some pressure on the factors and the credit appetite, especially towards these, pressure names. So yeah, we don't see, active import factors declining, number of them, but I would rather say that it's the appetite, changing according to the cycles.
Okay, thanks. Hope Paramanandan question answered well. And we have a little bit of time, so we'll take a last question, more specific to another region, which is Africa. And we have seen a tremendous improvement in the factoring volume in Africa, with reference to BCR factoring report, nearly 39%. It's one of the world highest factoring growth area is Africa. But still, again, the same scenario. We have challenges on import factor side. So please give us some more view on import factors availability in Africa, and what is FCA's current plan to improve the connectivity.
Thank you for the question. I will take the liberty to answer that on my colleague's behalf. We have a new colleague, regional representative, regional manager from Africa, Nisaro. He has done a tremendous job, onboarding new members, facilitating the growth in factoring development in Africa region. So that's why we're seeing that, the results, the initial results, and we are expecting even better ones coming out in the next 5 years. And as long as import factoring capability services from that African region is concerned, I think Africa is no different from any other emerging markets. They are always focusing and developing, domestic first, and then afterwards export factoring development, and then eventually import factoring development. Because they in terms of sophistication, in terms of complexity, import factoring services is usually the most demanding in terms towards factors. Okay, that's my experience, and then that I can share with you. Even for India, even for Vietnam, the outward bound, export oriented nations or emerging markets, they always focus on the low hanging fruits first. Then when it comes to balancing and when demand arises, then comes the import factoring services. And I think Africa is no different. Eventually it will come, okay? But as I mentioned, there's a path, there's a process.
Right, thank you. And Ravi, do you want to give any, you would like to add more on this Africa market, how India factoring covers and their business potentials? Can you please add?
Yeah, so the market is huge. It provides a huge trade floor opportunity from an India or an Asia point of view. There is a huge opportunity in specifically the pharma, the electronics, engineering, and whatnot. However, you have to see from Thompson rightly said, it's an evolving process. Even in India today, we don't have capabilities to provide import factoring services for the imports in India, and India is a huge net importer also. So the reason is multifold. It is the growing appetite of the countries and growing appetite, the growing legal environment and maturity of the market. Only then you are able to scale up. Today, we don't have that scale up. Domestic is growing, I think, in the entire African continent, specifically some countries, it is growing tremendously. Definitely, there is scope for more improvement in the exports and the import side also. You would also have to see from the perspective that even though where we stand today, there is certain amount of political uncertainty across the African continents, and we have seen that prevailing for a number of years. Till that most of the that is ironed out, there will be hesitancy and dependencies on the LC-backed business. Even for an LC-backed business today, African continent, some people are shy of doing that business. Even the LC confirmation is required from possibly a developed bank, a developed market bank. Many times that is required. So it's a process. We are not there yet today, but definitely there is more which can be done from the African side. And as the time goes on, I'm sure that there will be opportunities to cover not only from an FCI perspective, but even from a TCI perspective to cover the African markets. But the predominant requirement will be to iron out the the local political uncertainties which might be affecting African continents to a large extent.
Thank you. Thanks, Ravi. And I'll take the last question quickly to Thompson. It's from Paramanandan. In case any dispute between export factor and import factor, what role FCA can take to puzzle it out?
Oh, thanks for the question. Well, first of all, we have GRIF. These are all the standards and guidelines that you to operate for both factors within the partnership. So if you follow that, actually, we do not have a lot of deviation, and we do not have a lot of disputes. Out of the past 50-something years, we have six cases. So that is that's an evidence that actually kind of indirect, you can say, but to really prove that that actually this GRIF works. It provides very, all the clarity you need to work within the boundaries, within a partnership. So even though we have, disputes from time to time, that, one decade is very rare. And also not because of that, because we not only with GRIF, but we also have rules of arbitration, and we have, if I recall correctly, 18 articles, specific articles to, for members, for import and export factors to follow how they should arbitrate, how they should resolve these kind of disputes, any disputes between them. And if that doesn't work, we still have an other system that, before we go to litigation, is what we call tribunal. So to resolve this, I can share with you from my personal experience from, over 2 decades. The latest one, I think I have resolved, these import and export factor, they have this disagreement, what you call disputes, through active and proactive communication, and, you find out and follow which one doesn't follow or deviate from GRIF. That is usually the outcome that party that deviate from GRIF actually would suffer a little bit, and, because of not working under the boundaries, within the boundaries. And the last time that the example that I had shared with you is, worked out beautifully. The disputes got resolved, and eventually the export factor got very satisfactory results and response from the import factor, where they had disputes before, and the payment came out, and everybody's happy. And now they become, they're partnering in again. Case closed. So I think that's how system, when we have a system and we have rules and boundaries in place, if you follow that, if you don't deviate, things will be smooth.
Thank you. Thanks, Thompson, for the detailed explanation. So it's time to end the show. Thank you so much, Thompson and Ravi, for joining us and sharing your insightful thoughts on a legal framework, FCA, factoring, and the industry aspects, everything. Thank you so much for joining in.
Pleasure. Thank you so much. Thanks, Thompson.
It's always nice to see you, Ravi.
Glad to see you. Thanks.
Thank you.
Take care.
Thank you. Bye-bye.
Thanks. Thank you all. Hope all your questions were answered. If you want to know more about factoring or India factoring, please log into our website or our YouTube channel, or alternatively, you can directly contact us in our direct contact number available in our website. I'm signing off. We'll be back shortly with another interesting topic shortly. Thank you so much.